following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom. How's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Follow what you love, and it will take you where you want to go. Natalie Goldberg. Market-wise, let's take a look at it out here. We have the Dow Industrials down 16, NASDAQ off 12, S&P's flat. Gold contract up $3.20, traded at $1,243 an ounce. Silver up 8 cents at $17.09 an ounce. Platinum down $4 at $1,011 an ounce. Copper off a penny at $2.24 a pound. Light sweet crude up $1.30, trading at $43.98 a barrel. Bonds, the 10-year notes down 7 ticks, 129.04. 30-year bond off 25 ticks, 161.05. King dollar down 266 ticks, trading at 94.53. You got the euro up 24 at $1.12, and the yen is up 22 at $1.11. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? The world of the S&Ps, let's take a look at them. Hey, what do we have? We're going to have some great action after the close out here. I'll tell you that, folks. So, cash S&P out here today. We got to 2096. You're at 2088. And it looks like we're going to have a small ABC structure on the way down. It's going to be a close call. We'll see what this volume comes in at. Right now, we're at 571 million. It would have to come in at less than, it'll come in less than $1 billion. It'll probably come in less than 900 million. So it looks that if I put the SPY up here, yeah, you're going to have now this is subtle, man, but that's what it's looking like. So your 8 point on this would be 210.91, 92. I'm going to call it 211, 207.50. So I'll keep it at 207.50 and 210. So you get $3. $3 would get you down to 206.52. And 206.52, yeah, that makes sense. So 206.52 will bring you down to the next range, the range that we had been traded in from March 30th over to the 12th of April. So it's going to be pretty cool watching this shake out, because we're going to have Apple out with the numbers at 4:30, and, you know, bottom line, Apple is going to move the NDX 100. It's going to move the S&P. So we'll see where that shakes out. My take is that Apple is going to get down to the 100 to 96, and Apple right now is trading, I believe, at 104. So let me just see this Apple again for a second. Yeah, we're at 104.51. We're going to take a look at the NDX 100, the 3 Qs. This is what we have with the 3 Qs. 3 Qs right now, down 70 cents. You're at $108. Your lowest swing out here is $108.12. You know, I suspect we'll wake up tomorrow morning. It's going to just jump that creek with good old Apple. What we have here, which is really cool, folks, is that we had a lot of numbers coming out at 4 o'clock. We have Apple today. You have Facebook tomorrow. You have Amazon on Thursday, okay? So big weighting structures inside that NDX 100. Gold contract. What do we have with gold? Gold out here is traded at a price point out here today. $12.32 is the low. $12.46 is the high. You're up $3. You have the volume behind the move, 139,000 contracts. This is pushing highs with volume. Now, it's going to be wild because The curveball is 2 o'clock tomorrow afternoon. Federal Reserve, they come out with a statement. No press conference statement. Let's go over and take a look at the notes. We take a look at the notes. So what do we have with the notes? The 10-year note, it's down 7 ticks. You've done 973,000 contracts. Those notes are setting up to go after the lowest swing point right now of 128.01. Now, as notes and bonds go down in price, the market is bringing them up on yield in the context that the market itself is still saying that, and this is through the Fed funds futures, that the rates will not go up tomorrow, and I don't believe they're going to. But the market is bringing them up a bit. Now, King Dollar is the number here, because, so picture it, what the statement is tomorrow is going to be what it's all about. So you're going to have a statement without a press conference, so the statement is actually going to be more important. King Dollar out here today, we're down 261 ticks. You've done 20,000 contracts, and that's light, you know. So it looks like we're still going to be in a consolidation here, you know. My bigger take is that it wants to go to this 92.50, but today it's saying, you know what, I'm going to bounce around a little. So that volatility is going to continue right into 2 o'clock tomorrow afternoon. Our phone number is 877-927-6648. Let's get over and take a look at Apple first, because Apple's coming out with numbers. So, Apple's really flat market, down 59 cents, trading $104.49. You've done 29 million shares, which is short volume, by the way. It's average volume for what Apple's been doing lately. That being said, what Apple has is this. We take this, I'm going to put this on a weekly first. And what you're going to see is this. Apple, if we bring this back, May of 2015, Apple was trading at $132. Goes straight down to $92. Now, 92 has a high volume low, huge high volume low. We do a counter trend bounce. We go from 92 all the way up to 123. Now, the 123, folks, on a weekly basis had volume of 195 million. Well, you were going into 385 million. So just get that wrapped around your head for a second. 195 million, you're going up, you're going into 385 million. That's a vicious supply line. Huge, okay? Well, it can't handle it. What does Apple do? It goes from $123, November 2015, down to 92 again. Now, it hits $92.39, and that was testing the lows of August. And we did test them with lighter volume. Did 380 million versus 500 million. Okay, now check it out. That being said, what do? We go back topside again. Now here it is. You go back topside. 2 weeks ago, we were trading at $112. The $112 had 162 million shares, and you were going into 315 million. So what does that lay out? That lays out Apple wants to trade, I don't see it down a lot, but $101.53, that's the high of the low. You break that, guess what? 92 bucks. So 4:30, action. Lay those bets down, folks. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials are down 20, Nasdaq's off 16, S&Ps are down $1.50. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 17. Nasdaq's up 17. S&Ps are off $1.50. And as we do each and every Wednesday at 20 past the first hour, we have our man, Mr. Basil Chapman. And don't forget, folks, at TFNN, Monday, Wednesday, Friday, we do live programming 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, live programming 7 o'clock in the morning to 6 in the afternoon. Now, no matter where you are in this great country right now, if you're in your car, listening on your car radio, remember that you can get us right on your cell phone. TFNN.com, hit Tiger TV, great audio, great video, HD quality video. Our man, Mr. Basil Chapman, does a great show every day, 11 to 12 Eastern Standard Time. Also has a great newsletter, The Opening Call. You can test drive that by coming over to our website at TFNN, go to newsletters, go to trading newsletters, see The Opening Call, test drive it 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. Yourself?
Very well, thank you.
Yeah, I hope spring has sprung in Boston, has it?
Yeah, it's a little cool, but we've had some beautiful days over the last 2 weeks, so we can't complain.
Perfect, man. No one's going to listen to you anyway.
Right, certainly not the weather. Right.
Totally. So, what are we going to look at today?
So, I'm showing you this chart that I mentioned to you last week, and basically what it does, it's really a very simple-looking chart. If anyone's listening on the radio and you can't see the chart, there's a squiggly, thick red line, and that's a 20-period moving average, 20-day moving average. And what it's done is it's followed the course of the Dow. This is the daily chart to make a W formation. And within that, of course, you've got the Dow itself. So from the May high of last year, it's almost a year ago that it made the high. Isn't that incredible? So it was 18,351 in the Dow. The Dow then plunged into the August low at 15,370. They made a U-turn and came all the way back, but it didn't go back to the old high. It stopped at just under 18,000 on the 3rd of November. And then it went back down to 15,450 on the 20th of January. And then it made another U-turn and made a higher high than that previous one. Still did not take out the high from May. But there's a beautiful symmetry between the May high of last year, the November high. You can see it says left side here.
Sure.
And then to the right side, it stops on the 22nd of April. Well, on the 20th of April, 2 days before, we made that turnaround at 18,167. So now you can see the pattern that's I've circled in yellow, and the yellow is at each one of these, the May high of last year, the November high of last year, and we don't know if it's a high yet, but I've circled the one on the 20th, that's last week. So I made it real simple. I said to my subscribers, even though we are short the Dow in a number of different positions, it's going to be real easy, because if the Dow from the 18,000 level that we closed at last Friday, if we were to see the Dow move up, and this is a closing basis, and to close over 160 points higher, there's a really good chance that we would have a very quick run and try to test the old high of 18,351. And if we close lower by 160 points, there's a real good chance that this thick red moving average, which is almost looking like a magnet right now, wanting to see the Dow testing it, that's going to be the target. And within it, I've got an up channel, these dashed lines to the upside, which says that if we break to the upside, you can expect some kind of an up channel. If we break to the downside, there's an arch formation forming. This is a very critical period, because if we were to break to the downside, the way I'm reading the market, because there's rotational strength, I see more a correction. I see 17,500, maybe 17,300, somewhere in that range. And then I think we might turn around and start heading back up again, because these weekly charts, let me show you the weekly chart.
So
this is the weekly. I'm sorry, yes?
You're showing, where are you showing strength?
So in the strength so far is that in each one of those tops that we saw from the May high of last year, within 4 or 5 sessions, we had broken underneath that 20-period moving average. See, that's that one with the circle.
Sure.
And here's the one with the circle of 5, 6 sessions, and then all of a sudden you made lower lows and lower highs. Very quickly you went towards it. So right now what we're seeing, and I'll show you what we're talking about, what I'm talking about anyway, is that within the weekly chart, we've had just the move from January to last week was a 17.5% gain. That is really unusual. I don't remember ever seeing such a very quick gain with just minor peaks to the upside. In fact, this peak B was within 2 points, and then it moved to a leg C. So it says to me, based on time, we should see some kind of a consolidation here. And you can see in the left chart, where I've got many more indicators, you can see the MACD's turned down, stochastics under 80%, is 75%. So that's why I say it's a pretty critical area just in terms of the short term, but the short term is going to dictate the intermediate term. And that's why I'm saying about 160, 200 points up or 200 points down. I think that becomes a trend change. But most importantly, look how strong the technicals are here in the weekly chart. This is the MACD, the moving average, convergence, divergence, still very strong. And the stochastic is at 94%. That's within 3.5% of 100%. That is very strong. So if this continues flattening out and doesn't break under even 85%, we could have a consolidation that's basically sideways. And if you look at the different indexes, look, the USO, that's the oil fund, has made a peak D in the daily, and the weekly is attempting to rally. So that says, based on the letter D, you could start to see some kind of consolidation in the oil. The XLE, which is the energy, S&P Select Energy Spot, is in leg D. Nice move to the upside, but and leg C. So there's a rotation going on, and my suspicion is that one of the reasons why the market hasn't pulled back as sharply as we usually get after that, the May and November highs that have so far matched, is because you've got stocks that are in the Dow, like an Exxon, which is acting very well, just went to leg D today, and CVX. And as long as you've got this rotation going on, CVX has just gone to a leg E. So I'm looking at this and I'm thinking, well, there is still some strength. We went long a particular bank stock today because the XLF is still acting very well. Now, I'm not sure what the relationship will be to what the Fed says tomorrow, because I don't see them raising the rates. But the TLT has pulled back. So in a sense, the market has done it for the Fed a little bit by pulling back and having rates rise a little bit. So maybe that's why we're looking at some of the financials acting quite nicely for a change. And so in the portfolio that we have for subscribers to my opening call, we have a very mixed portfolio. We're long and we're short. And I'm looking at each individual sector and the stocks that we have, and I'm trying to decide, independent of the market, is this something we want to own because it's acting well, or is this something that is just, it doesn't have the strength? So rather, we don't have to be in it, or we could be short. And I'm trying to treat this bifurcated market, the split market, with positions in that particular, that frame of mind. And we'll see what happens tomorrow. So I'm making it clear, 100 points, 160 points up tomorrow, or Friday or Thursday, or 160 points down, and that becomes the trend for at least a couple of weeks.
And folks, you can come over to our website at TFNN, go to newsletters, go to trading newsletters. You can test drive the opening call right here, right now, 30 days, absolutely free. Basil, have a great night, safe night. Look forward to the show tomorrow.
Thank you very much, Tom. Same to you.
Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down 16. Nasdaq's off 16. S&Ps are off. They're flat. Inside the Dow, let's see the strength versus the weakness out here. So strength out here, you get DuPont up $1.62 today, trading at $67.59. And if we pull this back, let's see where this has been. So this is the DuPont had its high as March of 2015, $76. It goes straight from $76, man, to $47 in September of 2015. Goes back up to $75. Oh, this is going to get intriguing too, because We're coming into that area, and it's going to have a lot lighter volume. So you're at 67.60 right now. And once you get inside 66, that's saying that, hey, yeah, get up to 69, somewhere in 69, even 70. We take a look at the second. Okay, 1 second. Sorry about that. Where am I? There we go. The second one here is Boeing. Boeing is up 222. That looks to me like it's just a dead cat bounce. Yeah, that's just a dead cat bounce. So Boeing has a high of 158. You're coming into, on the weekly basis, we had 6 million shares. Last week you only did 5.3, and you're coming into 8.3. Let's go to Alex in Newton. Hey, Alex, what's going on?
Hi, Tom. How you doing?
I'm doing great, man. Yourself?
It's okay. We're raining out, so it's okay. We can do that.
That's right. Rain's good, man. Rain's good for all that good dirt you get up there. All those beautiful flowers are going to bloom in Newton.
Yeah, right. Rain is good for you in Florida.
What are we going to look at?
Actually, I have a question about the waves theory. And can you explain me in a few words, just for me to understand, what's the difference between Chapman and Elliott waves?
I would ask Basil that, but my understanding would go like this: that the what happens with a Elliott wave is the third and fifth waves that can actually get to. They can be deeper waves, and then they take off topside in a big way. Where Basil's, you're not going to get under a wave in order to make another wave.
Okay.
Yeah, that's.
We all understand that it's a matter of all the technical analysis. It's a matter of probabilities, right?
That's correct.
So it cannot be like, okay, we finished like wave number 7, and that's it. Right? But I am confused with your with Basil talking to you a few minutes ago.
Okay.
He's saying that, okay, we long that, we short that, and I don't see anything supporting that. I don't want to be in pain in the ass, but
no, you're not. But you got it makes more sense to ask Basil that. Okay, I believe this is I've known. Okay, so it'll be easier asking him that, but I think what's happening is this: Basil likes using the 9-period exponential average. Then he likes using the 20. Okay, so what has happened is that on the aspect of things going up right now, they're under the 9. Okay, so they're failing the 9. Now, the only one that's failing the 20 right now is the NDX 100. The 20 hasn't failed yet. But it would, it'd be definitely easier asking him. I mean, you know what I do. I only do one thing over and over again. And sometimes it's really what's wild about it, folks. Okay, even when I'm doing webinars, I mean, I've done the same thing now for 23 years. So
I'm not sure about 23, but I don't question this. But I know you for 20 years, and I'm pretty much tracking your record for 20 years, and that's absolutely unbelievable.
Oh, you're too much. You're too kind to me.
No, I'm not. But you have some people on the same radio station, right? And I cannot find their track record. Why don't you ask everybody to publish that?
It's not as easy as you think. That's what it really comes down to. I mean, it's quite a bit of work following everyone on a continual basis. So that's the first aspect. The second aspect, theoretically you could do it, but bottom line, then it's, we produce right now we're producing 60 hours of radio, and between 60 hours of radio and trying to get everyone in and then trying to do the ads, I mean, it's a small company, Alex. Do you know what I mean? That's
it's not a small company. It's a huge company. It's all over the place.
Listen, I appreciate the feedback, and I know there's no doubt that would even be better. I understand that. Believe me, I do. You know.
Okay. Thank you, Tom.
Thanks, man. Have a great one.
Bye.
Have a safe one. Let's go to Donald in Harrisburg, Pennsylvania. Hey, Donald, what's going on?
Hey, Tom. How are you today?
I'm doing great, man. Yourself?
Good. Very good. Thanks.
So good old Apple, huh? What are we doing?
Yeah, I was hearing your take on Apple. I'm thinking of adding to my short position on the Qs. And, a couple of things are troubling me. One, buy on the rumor, sell on the news. And the other one was window dressing coming into the end of the month of April. I was just wondering what your take is on those two.
Yeah, so what date do we have? The window dressings will be a big one, but we're on the 26th, so the window dressing's not here yet. Let me just see this for a second. So it's hard to believe that May's, okay, so that's interesting. No, we're dealing with window dressing Thursday. Okay, wow.
Yeah. I mean, I think May's going to be a down month, but I'm kind of wondering if it wouldn't be wise to wait until, Apple does what it wants to do and, we get some kind of window dressing and that kind of thing.
I hear you, man, but every single day I'm shorting the NASDAQ. I love shorting the NASDAQ.
Oh, yeah.
The NDX 100, yeah. I mean, I'll do it. What you have, this is what's so cool, folks. So let's just go through a couple of these high-weighted NDX stocks. So watch what you have here. You got Google. You talk about giving it up. Google just went from $725 today to down $14 to $708. Okay. Mike. Now we know what's cool about this is Google already came out with the numbers. We know they're bad. Okay. Now Google also has a high volume low at $663. Okay. So it's saying, hey, you can go off after that number. Microsoft, MSFT. What does Microsoft do today, folks? Microsoft goes from $52.35 to $51.28. That doesn't seem a lot, but it is a lot when the weighting structure is so large in the NDX. Now let's go over Starbucks, SBUX. What does Starbucks do? Starbucks goes from $58.67 to $57.75. Also, big weighting structure. Amazon. These are the largest AMZN. So go over to Amazon. What does Amazon do? Amazon goes from $626 to $617.
Hey, real quick before I get cut off here, what do you like trading as a day trader? 15 minute, 4 hour?
Stay right there. No, 10 minutes.
Okay.
Stay right there. We'll come right back.
Okay. All right, we'll do.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 5. Nasdaq is down 9. S&Ps are up $1.50. And we're talking with Don from Harrisburg, Pennsylvania. Yeah, so, the reality is that, you can wait. But it looks to me, Don, that the NDX itself is very weak.
Yeah, I noticed that too, yeah.
And the neat thing, and that's what I always wanted to talk about, is that my take is Apple wants to go lower. But you can see when you look at the rest of those structures, they are going lower. And the stocks that I just come out with, excluding Amazon, have already come out with their numbers. So I like that probability. That's
right. That's why I put out there: sell on a rumor, buy on the news. Because they're kind of going down before the news, and then you think the news might actually bring it up. So I'm just trying to get in on a good trade. If I wait a little bit and add a little bit to my short position by waiting, or would you just do it before the day's closed today?
I never wait. I never. That's not where the money's at, man. I mean, here, let's talk about something for a second. You hear this years ago, folks, okay, on a continual basis, right? What I've seen more than anything, okay, when they claim that, you can't get lows, you can't get highs. No, you're not going to hit the tick, but you can get pretty close, okay? If you're trying to get if we have large consolidations, it's awesome, because large consolidations, like what the oils like to do, that's awesome. What the market's doing right now is cool, because you could, if in fact we stay in this consolidation, it's a monster consolidation. But the aspect of not taking a shot and putting a stop in doesn't make any sense to me. What I find is that when you're at highs or at lows, it is much easier to put the stop on the other side of the short position or the other side of the long position.
Well, I'm in your camp. I got my trade in for I'm shorting it. I'm just trying to. I just wanted to add a little bit to the position. That's all. Hey, let me ask you, on a day trade, what do you use? The 15-minute and 4-hour?
No, I use 10-minute. That's all I use. That's it.
Okay. You get a better indication from the 10-minute, huh?
No. Okay. This is great. This is okay. No. But for me, that's what I've used. And even, when we were talking with Alex, right? Something, here, folks, so let's talk about technical analysis and fundamental analysis for a second. They both look backward, okay? Technical analysis, you're looking at mathematically something and technically something. You say, okay, I think I like how this goes. Fundamentally, you're believing what a CEO says, and you say, okay, that's what it is. Once I figured out that everyone's lying, a long time ago, I said, okay, fundamental analysis doesn't work. That's the first part. The second part is even more intriguing, though. With technical analysis, you can look at thousands of equities very quickly. That being said, and I learned this off John Murphy, and this was so cool. John Murphy did this workshop with us at the World Trade Center in the year 2000. And he was showing that you can use a 50-day moving average. And if you have money management, guess what? You're going to make money. So to cut to the chase, even in technical analysis, it's all about money management. That's the number. Do you know what I mean? So
Sure.
And that's why I kind of like I like highs and lows, because I can be wrong 2 or 3 times, but as long as you don't, basically get tanked and you have bread, you're all set. You see what I'm saying? And the same with down the bottom.
Yeah.
Do you know what I mean? So,
Yes, I do.
So that's what you want to make sure you always have, because Murphy showed it. It was awesome, man. I was in that workshop and I looked and it was blowing my mind, man, because guess what? In a choppy market, a 50-day or any type of moving average can kill you, folks, because it would chop up and down. But in a trending market, guess what? It's you hit that trend, man, and you're gone, Cooking, brother.
All right, thanks, brother.
Okay,
Appreciate
man.
it.
Have a great one. Have a safe one. Let's go over and take a look at, as we're speaking here, let's see, NQ. What? Because we just got a little bounce here in these NQs. And if you want to see how high volume swings love to get tested, folks. So when we're doing this show this morning, my son and I, we do a show in the morning. And what you're going to see here is this. When this first came down, right, well, the first thing you'll want to look at is, okay, where's the high volume swing low? And on a 10-minute, guess what? It was sticking out like a sore thumb at 44.31. You can replay the show, man, and bottom line, that's where we thought it was going. Well, guess where it just went? 44.31. Now, as it came down to 44.31, what did it do? Well, when we were down to 44.31 on the 22nd of April, at 10:40, it had 17,000 contracts. Well, guess what? You came down and you did 4,000 contracts. So, 2 different things ended up happening there. Can't bust them down. What's it going to try to do? Now, the correlation can come right back. And then what you do is this. Well, this is what I do anyway. I take that 10-minute and I say, okay, now you're going to try to go higher. Now watch what it needs, because when we came down at 10:50 this morning, we had 71,000 contracts on a 10-minute. Well, the last bar had 46,000. So that's telling me that this is just a dead cat bounce at this point. We have plenty of time. You get 22 minutes left before 4 o'clock. Before the futures close, you got 38 minutes left. So that's saying to me that, guess what? It's not going to be able to bounce here. You're coming up to ice. That means it's going to make another attack down to the bottom again. So these high volumes, highs or high volume lows, okay, are important to basically keep your head wrapped around. Inside the, let me just go look at Google for a second. So Google, Google's, see, and what you do have is this. When we just went through those stocks, so Google, Microsoft, Starbucks, those are large weighting structures inside the NDX. Amazon is the monster. And Amazon, this is so cool how this is going Tuesday, Wednesday, and Thursday, okay? The Tuesday, Wednesday, Thursday deal is going to be a trip, because Thursday is Amazon, today is Apple, tomorrow is Facebook, and if we go over to Facebook, now Facebook's going to be a tough one, man. Facebook, Facebook looks to me, first off, that maybe in a few weeks it wants to be at 96. But the way it's trading right now, it's like, okay, hold it. You're coming into a high volume swing from April 13th. That had 88 million shares. You're doing 20 million today. It's like, okay, man, that's going to bounce up. Yeah, that can, right now it looks like it can go to $1.14. Yeah, that's not done, man. This one's not done. You have 117. It can actually hit that 117. You're at 108. So what you have there, no doubt, is that you're going to have the yin and the yang fighting each other in a big way, because particularly this Apple deal is a big deal. Because what you do have with Apple, Apple will suck a few other stocks down and or up. That's what it comes down to. Some of the higher volume stocks out here, and it looks like there's going to be a low volume market out here. You have, let's see, Micron Tech's up 97 cents. You have Twitter up 69. Alcoa is up 48. Neighbors Industry is off $1. You have NXP Semiconductor up 315. We go take a look at some of the Dow stocks out here. Boeing's up 229. That's a dead cat bounce. Exxon's up 25. See, the Exxon and Chevron, man, I'm almost ready to short these things. You're getting real close, man. So the November 3rd high in Exxon was 87.43. You're at 87.58. You're coming into it with 7.3 million versus 20. This is a monster trading range. The bottom of that range is 72. You stay right there, folks. I'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We got the Dow flat, Nasdaq's down 10, S&Ps are up $1. Let's go over to those notes. So, we get some action, folks, in this interest rate structure. So the notes are at 123.09, and you're getting another. This is subtle, but you're getting another expansion of volume. You got 1 million contracts right now, and 129.03. Yeah, and you're coming right into the high of the low, the last low that we have out there, which would be 128.01. So get some sleep tonight. Well, we're going to have another great hour because we got a lot of earnings coming up. But the way those notes are trading right now, there's going to be some fireworks out here tomorrow. We all may think that, the rate structure is not going up, but it's almost like the way that the notes are trading, the bonds are trading, that would be saying that maybe something's going to be heavy in the statement. The dollar, thus far, it was down pretty good today. It was down 506, then it was down 600, but it only ended up being down 226, and it's really rejecting a lower price. So that's saying that that dollar could bounce. If we get over to gold, gold's still looking pretty good, but this is going to move. Yeah, see, gold's looking good. Gold's 140,000 contracts. It's at the higher end of its range. We get some divergence here, man. And the divergence would be, so watch this. So the statement, what you're going to be looking for in the statement, as one of our targets just said, that they may be setting the stage for June. Well, that's very well which they may be doing. But you got to remember something. The Fed has no guts. They set the stage for 6 months ago, and they still haven't done anything. And maybe saying no guts was the wrong thing. It's not that they have no guts. I don't think they claim they're transparent, and they're not transparent. I think the biggest thing why they can't go up in rates is, and if you're watching Tiger TV, you're going to see what I just put up. It's the world rates. The world rates, folks, our rates are very high. They're huge compared to the world. They can't destroy the whole texture of the world by raising rates. That's just the way that's my take on it. And it has the aspect, because of the aspect, this is a one world deal now. This is not like, we have the United States, 30 years ago, 35, 40 years ago, it was the United States. It was state by state that was, selling goods to each other. We were importing goods from Japan then. You were importing goods from Korea then. Shanghai just opened, Shanghai opened 35 years ago. 35, 40, no, 40, how old am I? 40, 60s? Yeah, 35 years ago, Shanghai opened. I remember when it was opened. So that's brand new. Now what you have a one world deal, And for all you folks up in the Northeast, come on down to Florida. Let me show you something here. This is going to be a trip. And in particular, right where we are, the Tampa Bay area. So Citigroup, right? If you didn't hear this today, Citigroup this is the first time in 14 quarters they have laid people off. Well, guess what they're doing now? And there's a big office in the Tampa Bay area. They're hiring 1,000 people in Tampa. You know what the next thing is going to happen? And this will blow, a lot of Northeast folks away. Let's see. But what you'll see happening, we got Raymond James down here. You'll see some of these financial companies start moving to Florida, because what happens is that you don't have to be in New York City anymore to make big money. The big money's still there, there's no doubt. But once these other banks start seeing Citigroup move in, you'll see it happen, because we got plenty of bread down here. So the zip code, in fact, the zip code where we are right now, folks, is the third richest zip code in the United States. So the bread's here. The question is, the bankers, they're not here just yet. You stay right there. We're going to be coming right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. 4:30, Apple earnings. Action! It is better to believe that than to disbelieve, and in doing so, bring everything to the realm of possibility. Albert Einstein. Market-wise, let's take a look at it out here. Dow Industrials up 13, NASDAQ down 7, S&P's up 5.5, gold contract up $3.60, trading at $1,243 an ounce. Silver up 10 cents at $17.11 an ounce. Platinum down $4 at $1,011 an ounce. Copper flat at $2.24 a pound. Light sweet crude up $1.37, trading at $44.02 a barrel. Bonds. The 10-year note down 8 ticks, 129.03. 30-year bond down 27 ticks, 161.03. Now, tomorrow, 2 o'clock, you get the Federal Reserve statement coming out. Bottom line, what that's going to be all about is, of course, is rates. The way that market is looking right now, it looks like no rate hike. There's no news conference. I expect no rate hike either. King dollar down 246 ticks, trading at 94.55. You get the euro up 19 at $1.12, and the yen up 21 at $1.11. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. You got to love it, folks, okay? What do we have here? Okay, so cash S&P got to a high out here today of 2,096. We are at 2,090. You failed on price and you failed on volume. So it looks like we get a small ABC structure on the way down, which is pretty cool here. So because we're going to really get our information at 4:30, because what you will have, Apple will move these markets around. So on this ABC down, your A point on this is 2111. Your B point is 2077. So you're talking about what? 23, 33, 34 points. That gives you 2064. And right now we're 2090. 2064, this is going to be cool watching this shake out. 2064 brings you down to the high of the 12th of April, the low of the 13th of April. So we'll see where that shakes out, but that's what that's set up right now. NDX 100, the 3 Qs, and of course, inside the NDX 100, Apple's a large weighting structure. What do we do out here today? Well, you have light volume. The low of Monday was $108.12. Well, we hit the $108.12. It's just laying there, you know. We'll see where this shakes out at 4:30. My take, because if we do go over to Apple, my take on Apple is this. Apple right now is trading at $104.35. It looks to me like it's going to get into the $100 to $96 level. Where I'm going with the $100 is this. The $100 is the high of the March 1st level. The $96 is the high of the January 27th level. But both of those, and what we also have here is we have a high volume low that was established out here on January 28th. So that high volume low wants to get tested. Gold contract. What do we have with the gold contract? Let's take a look at gold. And, you know, we're gonna you talk about some divergence out here. There's gonna be big action here because of the dollar. So gold today had a price spread of $1,232 to $1,246. We did 141,000 contracts, which is great contracts. So bottom line, gold is still continuing to build cause to get up into the 1287 and very well over that 1287. So bottom line is that this very well could be a monster ABC structure on the way up. Big numbers. The notes. Let's go take a look at the notes. So the notes, you know, the 10-year note right now, folks, we did 1 million contracts. Sorry, folks, excuse me. 1 million contracts. We're at 129.04. The high volume swing low out here is 128.01. It's going to go after that 128.01. The real kicker is, does it go after it tomorrow? More than likely, it's going to go after it tomorrow. And so with the notes going after that tomorrow, that would be saying that it's going to be a dovish statement. So we'll see how that shakes out. King dollar. What do we have with King dollar? Bottom line with King dollar, what you have is this. King dollar traded down to 94.15. King dollar had 21,000 contracts. Now here's divergence, and this is what it is. You know, my longer term take, meaning, you know, even a couple weeks, is that King dollar wants to go to 92.50. That being said, well, you know, King dollar today came down to 94.15. It was coming into a price point from the 21st. The 21st, we had 44,000 contracts. We only did 21,000. So what did that do? That come down, rejected lower price, had lighter volume. Guess what? Can't bust them down. King dollar's going to try to go topside again at 95.18. And where the divergence comes in that is this. The divergence comes into the aspect that gold looks like it wants higher. That's in the higher range. That has the volume. The dollar looks like it just rejected lower price. That's saying, hey, that wants higher. We know how this shakes out. Lower dollar, higher commodities, lower dollar, higher metals. 30-year bond. Let's go take a look at the 30-year bond, because the rates, it's all about rates tomorrow. 30-year bond, down 25 ticks today. You're at $161.05, and this baby is coming into its swing point with expanded volume. So you're at 161.05. There's 32 ticks inside a point, folks. That's saying you're only 6 ticks away from the swing low. We did 212,000 contracts. That swing low is 220,000 contracts. That's going to come into it more than like it's going to blow it away. Now, if that blows it away, what you'll get is this. You take the 160, you take the 169 at the top, you're going to be down at 150 on the 30-year. You're down 150 on the 30-year. That 10-year is going to take that south. And what does that mean? Well, here's some divergence for you. What that means, and this is a mind blow, okay? What that means is that rates are going up, okay? The market's bringing rates up no matter what Yellen and the whole crowd does out here, okay? So absolutely wild. Someone must have just come out with numbers because the NDX it shot up at the close and now it just shot back down. It shot up at the last 10 minutes. We went from 44.41. We got back up to 44.55. Now you're down to 44.50. Lots of numbers are going to be coming out here. Our phone number is 877-927-6648. You stay right there, folks. We're going to be coming back with some numbers. Dow finished up 13, NASDAQ down 7, S&P's up 5.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 13, Nasdaq down 7, S&P's up 5.5. And as we do each and every Wednesday at 20 past the second hour, we have our man, Mr. Andy Heck. And of course, don't forget, folks, every trading day, or Monday, Wednesday, Friday, we do live programming, 8 o'clock in the morning, 5 in the afternoon. Tuesday, Thursday, 7 in the morning to 6 in the afternoon. Get it. Everything right on your cell phone. You go to TFNN.com, hit Tiger TV. You're going to get great HD quality video. You get the audio. Our man, Mr. Andy Heck's on every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Awesome show. Now, he's got something really special for you. 12 lessons commodity trading course with our man, Mr. Andy Heck. Now, Andy just came back from the University of Denver. He made it through the snow out there. He was teaching out there. This is a course that he put together for all of us right at Tiger. If you come into the front page of TFNN, you're going to see the 12 essential lessons for trading commodities. This course, folks, is starting May 4th. May 4th is going to be 4 separate nights. May 4th, 5:30 to 7:30. Then we take a 2-week break. And then we go May 18th, 5:30 to 7:30, 2-week break. June 1st, 5:30 to 7:30. 2-week break, and then June 15th, 5:30 to 7:30, 2-week break. Each one of those nights, you're going to be taught 3 courses. The first night is going to be commodity markets and demographics. The second lesson is going to be market breakdown in physical versus derivative markets. The next one is going to be overview of the market structure. This is all about commodities. You want to understand commodities upside down? You know, Andy is the guy who put together the Technomento, and what the Technomento means is he's putting the technicals together with the fundamentals. And inside the commodity market, absolutely crucial. Now, the whole course is $595. If you're a subscriber, you can get a 10% discount. That's an amazing value, folks, when you're talking about 12 lessons, 4 separate nights. It's on your page for a full year. Andy Heck, what's going on?
Hey, Tom. How are you?
I'm doing great, man. Yourself?
I'm doing good. I'm doing good. Thank you for going over the course. But if you don't mind, I'd like to go over it a little bit more in detail.
Yes.
And I hope that we can get this up in the den.
Forget the den is great, but guess what? We get Tiger TV.
Tiger
Everyone's
TV.
watching it.
Right.
They're watching it right now.
Right. So I have a pictorial up here of the U.S. Census Bureau.
Yes.
And the U.S. and the World Population Clock.
Right.
And as you can see, you have the United States, and the numbers are going up very slowly. 323,433,476 people living in the United States. And as I finish saying that,
this is real. This is going up as we're looking. Oh, this is a trip. Okay.
Now there's another one. But if you look at the one to the right, the world population, man, that goes up quick. Just to put it in perspective, on July 4th, 2015, there were 321 million, there were 2 million people less in the United States less than a year ago.
Really?
And Tom, when I was born in 1959, this world population number was around 2.9 billion.
That's it?
That's it.
There's been 4 billion people on Earth since you've been born?
We have more than doubled. And when you were born, what year were you born in?
1950.
Okay, probably. I don't have the exact number, but I would imagine
there were probably only 10 people around then.
2.6, 2.7 billion. It's exponential.
Wow.
The way. And the most populous countries in the world.
Okay.
You know, China, which is like almost 18% of the world's population, almost 1.4 billion. India, almost 1.3 billion. The United States is third. And look at how far behind we are. So, and these China, India, still developing countries building infrastructure.
Okay.
So in the course, I start out, I really start out with the demographics, and I'm going to go into it.
Which would make sense. You're right. Yeah.
Right, because that is the demand side of the equation. Commodities are finite at a price.
Yes.
There's only so much of a commodity you can pull out of the crust of the earth, or you can grow on soil at a certain price before it's uneconomic. Now, the higher the price goes, of course, you can get more expensive production. Now, we saw that in oil this year, for example. The U.S. was producing a lot of shale oil.
Yes.
When the price was $100, but below 60, hey, that's dried up. And we've seen recently that oil production has dropped below 9 million barrels per day. And it's probably headed south, at a price of $44 a barrel from here.
Yep.
It lags. It's got a leg.
Sure.
So we're going to start out with that. And we're going to look at technicals. We're going to look at fundamentals. We're going to also look at the geopolitical landscape. So you mentioned a lot of the courses. It's going to be 3 courses per session. The first one's going to be very introductory, demographics and physicals versus derivatives.
Yeah.
We all trade derivatives. I trade derivatives too.
Sure.
But the market for commodities is like a pyramid. And at the top of this pyramid is the physical.
Yes.
Because everything that we trade is trying to replicate these physical markets.
Right.
And it all goes back. And the further you go down on the pyramid, the further you get away from, the more space is removed. Because, for example, ETFs and ETNs, they use other derivatives to replicate those derivatives that are trying to replicate the physical.
Yes.
So to understand, at the bottom of the pyramid these days are the, very leveraged ETFs. At the top of the pyramid is always the physical. So what I'm going to do in the course, and then we're going to go through backwardation and contango. These are very important things. Sometimes, this tells us if a market's tight or a market's loose, but sometimes it's just reflecting the current market price, and sometimes it's leading. So there are ways to tell whether it's leading or it's following. We're going to look at term structure, which is the forward curve, which gives rise to backwardation or contango. We're going to look at processing spreads, like where crude oil is made into gasoline and heating oil and those kinds of things. We're going to look at location spreads. The price of natural gas in California is very different than the price on the screen at Henry Hub.
Is it? That's so cool, man.
Delivery. We're going to look at value versus price. And the way I like to always look at value versus price is to look at the historical price relationships of one commodity that's substitutable for another commodity.
Okay. Yeah.
I always talk about the platinum gold spread, the gold silver spread, but there are so many different things we can spread against each other. We can spread gold against anything, any commodity, because gold is money.
Sure.
It has been money for a long time. Then we're going to look at quality spreads, the difference between things like Arabica coffee and Robusta coffee, or the difference between 295 gold and 495 fine gold, and there's various other iterations. Then we're going to look at some of the technical indicators that I like to look at in terms of where I think the herd is going in terms of long or short commodities.
The herd.
We're going to look at and the herd, the herd is charging in and charging out.
Totally.
Then we're going to look at technical indicators. And that's very different from, what you look at every day. What I look at is a little bit different. I mean, I do look at volume.
No doubt, man.
Look at open interest. But I pay specific attention to certain technical indicators in commodities that tell me when they get overbought or oversold. Then option data, not option prices, but things like implied versus historical volatility and ETF and ETN products. It's going to be a great course.
Come over to our website, folks. Right on the front page. You can sign up right here, right now. You stay right there, right there. Indy and I are coming right back. We're going to be having Apple's numbers. Be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the market-safe commodity solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Apple just came out with numbers. Apple closed at 104.35. It's trading at 101.98 right now. Numbers go like this. The revenue, the estimate was 47.4 billion. They're only going to do 41 to 43. That's pretty intense. Yeah, so now the baby's at $100. So it's going to 96. They sold 51.2 million iPhones. The estimate was 50.7. And you can expect this to be up, down, all over the place. But guess what? Apple is going to make its way down to that $96. You're at 99 right now. That's that high volume low that's down there. And if we go take a look at Apple, what you're going to see, the $100 was the one that was laying out there. That was laying out there from March 1st. That was the high. The 96 is the high of the low of the 27th. You know, so that 27th is going to be game, folks. The 27th actually is the bottom of that bar there is 93.34. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. That course, Andy's going to be doing that course, folks. So you can come over to our website, sign up right now. Fabulous course, 12 essential lessons for trading commodities.
Tom, one last thing I wanted to mention about the course.
Sure.
What I also do is, because of my history in the physical business, as I go through each of these things, I kind of tell stories about trades that I've done that cement the concept. So
right.
we ran out of time. But let's talk about commodities.
Yeah.
Let's talk about one thing. Commodities are back in vogue. There's no question about it. Back in vogue. They've been back in vogue since the middle of February when crude made lows at 26.05. And, for those of us who trade commodities, who trade the futures, the ETFs, the commodity-related stocks, it's one thing. But to have commodity exposure in your portfolio, there's a great product that Everbank offers for exposure to these markets right now.
Oh, great point, man. Hey, if we go over, if you go over to TFNN, folks, what you're going to see, thanks, Andy. If you go over to TFNN, because so check this out. What happens, folks, is this. Let's say that you're in the CD market, okay? Now, this is pretty cool. Everbank has a 5-year market-safe commodity CD. So the way it works is this. Well, first off, let me tell you what you're giving up. What you'd be giving up is that whatever interest rate you could get on a 5-year CD, and I don't know what that is. Maybe it's 1%, maybe it's 1.5%, okay? That's what you'd be giving up. But guess what you're getting, folks? What you're getting is that inside this market-safe commodity CD, you have crude oil. Each one of these is 7.5% of the CD. You have crude oil, you have gold, silver, soybeans, corn, sugar, copper, and nickel. And what happens is this, is that it takes $1,500 to open it. It's an FDIC insured product. It's IRA eligible. And here's the kicker. You can't lose your principal, okay? But what you can get up to 70% of the upside potential. So if you're a commodity bull, let's picture your commodity bull. Every year, this resets itself. So each year, you can get up to 70%. But then, just so you can check this out, make it very clear to everyone, out of the whole even 5 years, you can't make more than 70%, folks, okay? And, that would be insane if you got that. My point more than anything is that it is a very cool way if you're a bull in commodities or you just want to take a shot and say, okay, instead of making 1.5% for 5 years, I'm going to have a shot to make some real money. It's a great product, isn't it?
It's a great product. I look at it as a real good diversification tool. And, when we're talking about our nest eggs, diversification is always the way to go.
Yeah, it is.
You don't want to have all your eggs in one basket. And listen, if you're giving up 2%, over 5 years. I mean, what is that? That's like maybe if it earns 2%.
Well, if it's $10,000, you give it up $1,000.
Right,
that's
$1,000. Right. And let's say that's over the period that interest compounds, but still, it's like a 6 or 7 to 1 risk reward.
Right.
Reward risk. So the odds are in your favor in terms of the CD. And for those of us who don't necessarily trade, or for those who do trade commodities, it's a great thing to put in your portfolio so you have that exposure, because if inflation starts going wild, this is kind of a protective type instrument.
It is. And folks, let me give it. So you can just come to our website at TFNN, or you can give them a call at 855-750-4051. So it's 855-750-4051. Yeah, great product, man.
Absolutely. So let's talk a little bit about some specific commodities.
Hey, we get the Fed tomorrow at 2:00.
Oh, yeah. I was going to finish up with that, but we could start with that. Hey, everything's in a holding pattern until we hear from them. No question. The Fed is going to tell us, dovish or hawkish. Everyone's betting dovish here. It's really the statement that's going to drive markets. But the bottom line is they promised 3 to 4 interest rate hikes this year. Yeah. And we haven't seen one yet, and the likelihood is we won't see one tomorrow. So maybe we'll get more false promises for June. I don't know if the markets are going to, basically go down on a hawkish statement here. I think the markets are waiting for action, not words.
Yeah, and so today we have some divergence out here, folks. And what I think, Andy, is that I still like what the gold contract did today. What I don't like, though, is what the dollar did. Right. So it's like, oh, man, this dollar wants to bounce. And so, folks, if the dollar bounces, guess what, man? Commodities will, basically metals will move off. So we'll see where this shakes out. But
well, the dollar is down. It's coming close to support. We're spending some time down here. So we'll have to see what happens with that. But the dollar will be driven by the Fed. I didn't expect a big move in the dollar today, given that the Fed is meeting tomorrow.
Yeah, no, I can see that.
Very interesting chart pattern in crude oil today. If we look at settlement to settlement price, yesterday crude oil settled at 44.04. It made a lower low today, and then it settled again at 44.04. So a penny shy of a bullish key reversal, but still good price action in crude oil here.
Yeah, and you have what? Aramco, is that Aramco, Saudi that was going to go public, right?
Saudi Aramco, but that's a year down. Right, that's a year down the road here.
Well, what's interesting about what you just said there. So check this out, though. That's where they're professing, folks. My take on that, Andy, is they're going to do that before that. They're you know how these IPOs go, man. They put it out. If they think they can get $2 trillion for that, I suspect they'll do it ASAP. You know what I mean?
Well, yeah. I mean, I would have thought that they wanted to do it sooner if they would have agreed to some kind of production freeze. But I think the Saudis are they're marching to the tune of their own drummer here.
Yeah. Well, listen, my take is that guess what? You're selling an IPO, folks. That oil business is going downhill, not uphill. Why would you sell the gold, right?
Well, it's less than 5% of their.
Oh, I know.
They're going to still own 95%.
Oh no, I know that.
But you can also be sure that if the thing is oversubscribed, they'll sell as much as possible.
Oh, you think so? Oh, cool.
I think they'll sell more.
Okay. Yeah.
Listen, they could still control it with selling 49%.
Oh, there's no doubt. Oh, but you know what they will have? They'll have.
They can also nationalize it again.
But they're gonna have total transparency.
Yes.
That's a joke, folks.
I know.
You stay right there. Andy and I are coming right back, folks. Apple is getting smoked. Someone ate the core of Apple, man, big time. We're going to be coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over. We're talking about our man, Mr. Andy Heck. We're talking commodities. We've got a lot of numbers out here. Apple closed at $104. It's trading at 98 right now. That 96 is wide open. Wouldn't like you're going to get 92. What that did with the NDX 100, you got the Qs. The Qs closed at 108.45. They're trading at 107.88. The futures, the NQs are down like $50 right now. So there's going to be some big action out here tomorrow morning. And what I suspect you're going to see here is that we're going to jump the creek, folks, okay? Because if we take a look at, you take a look at Apple. Apple's going to be the tough one. Apple very well could open right under, well, you have the high volume swing low at 96. I suspect it's going to get into that. And if you break that, yeah, it has another high volume low at 81. So bottom line is that that's going to be some major damage, and there's a lot more than that, too. So tomorrow night we got Facebook. The next night we got Amazon, and Amazon is down a couple dollars just with the Apple news. We just went from 616 to 614. Facebook doesn't look bad, though. Facebook closed at 108.76. That's trading down another 70 cents, but Facebook might save a few shekels inside the NDX 100.
Yeah, more reason for the Fed not to do anything to rates, huh? If the stock market's looking weak.
That's a fact, man. They'll be so scared to do something. Yeah, no doubt.
I think they were scared. I think that they are scared. No question.
They are scared, man. It's watching, how they've gone from, basically supposedly taking care of our economy to the world economy, but it makes sense, man, because we're one world economy now. I can see it. You know what I mean?
We're one world economy until we're not.
Yeah, right.
You know what? From our point of view, we are one world economy. If we look at it from other countries' point of view, we are not.
Well, what country would that be?
I think Europe feels like they're on their own. I think China doesn't look at it as one world economy.
I disagree with that. If China couldn't sell to us, man, they're going to be, they're in trouble.
China, you know what? It was very interesting. After we put, and we could agree to disagree on this one, but after we put some sanctions on Mr. Putin in Russia, China stood up and did a lot of swaps in local currency for commodities with the Russians.
Sure.
And you're right.
That still has nothing to do with supply and demand, right? Of course they will.
Our markets are buoyant for the Chinese, no question about it. But the Chinese are preparing. They don't know what the political landscape's going to look like here in the U.S. So I think they're making preparations for either way. We'll see. We shall see.
Listen, it's all about world domination. Survival of the fittest is the name of the game. I'm not debating that. What I'm debating is that they all need the United States. And as soon as they think they don't need the United States, good luck. See ya. Don't want to be ya. Because guess what? They go down the tubes, man.
No. We all go down together, I guess, right?
No. Why is that? Our biggest problem is that we think we have to worry about everyone else, man. Let them go off to the side for a while. Just give them no cash, give them no bother. You'll find out real quick, where the bread comes from. Anyway,
it sounds like a Bernie or a Trump speech.
It's not a Trump speech, man.
Well,
it's not even close.
By the way, there's a lot of similarities.
Don't get me going, man. Yeah.
There's a lot of similarities. There's vast differences, but there are similarities. You have to admit that.
No, I'm not admitting that. That ain't even close, man.
There are
I can't stand Trump.
It doesn't matter personally. It doesn't matter. Forget the personal. Take the personalities out of it. The messages are very similar. Very similar when it comes to the rest
You're
of it.
dreaming, man. Stick with commodities. You better get back to commodities.
Tom, I think you're dead wrong about that one. Anyway, let's look at natural gas. Let's look at a commodity that only trades in the U.S.
I'm sorry. Go ahead. What'd you say?
Let's look at natural gas, a commodity that only trades in the United States. So stay within our borders, and we won't argue. Right.
Oh my God.
Natural gas, man. It creeped higher. Try to get the shorts out. Open interest has come down a little bit, but now it looks like it might be going the other way. We shall see. There's still a lot of shorts in that market, and their fundamentals are horrendous. So, any upward move here is going to be short cover.
So, is this Tuesday or Wednesday? It's Tuesday. So, okay, this is cool. So tomorrow, folks, at 10:30, we have the oil numbers. Thursday, we get the gas numbers.
Right.
Yeah, this natural gas, man, is going to be a trip, isn't it?
It's going to be a chance. It's going to be a trip. It always is. It always is. It's the wildest commodity of all.
It'd really be nice to see if it actually gets going, though, man. Because what happens, folks, is that if this thing, it's been a killer for years. But if it actually is making a bottom, then you can trade it for years too. So
the only way I believe that it really can make a bottom and it can really move higher is if production goes down and inventories get worked off. I mean, that's really key for natural gas here. There are so many reserves. The whole structure, the whole fundamental structure of natural gas has changed with these massive amounts of reserves we've found.
Yeah. How cool is that, right?
No, it is cool.
And the amount. So even when they're fracking too, that's pushing more natural gas out of the hole too, right?
Oh, absolutely.
Yeah, right.
Absolutely. They're capturing a lot of natural gas. Let's take a quick look at grains.
Yeah.
Because the juice is back in the grain markets,
that's
particularly in the soybeans.
Okay.
It's been dry conditions in Brazil.
Yeah.
It's been floods in Argentina.
Look at this, man. Yeah.
And soybeans roofing, baby. But a lot of volatility now. We roofed for a while until last week.
Now, I should know what this means. Tell me what roofing means again.
Oh, just going through the roof.
Okay.
Right. So last Friday we made highs up almost at 1050. Amazing considering we were trading down at 850.
Yep. That is amazing.
Now we're trading back and forth. Now the ranges are getting wider, and it's interesting. And it's affecting corn because, the farmers have a choice. They could do some late season bean planting, which will make corn planting go down, the corn crop go down. Also, the price of gasoline is going up. So ethanol is going up along with gasoline, and that's taking some corn from the market. Very interesting there. And then wheat is a laggard. But wheat, look, also some nice volatility in the wheat markets. It's the whole grain thing. Mother Nature, man. The markets woke up and remembered that Mother Nature could throw us a curveball.
Well, and also, when we were going over your course, you were just showing us that population. That in itself, right? I mean,
absolutely.
More people, more mouths to feed, more everything, right?
I always say the following, Tom. The world relies on bumper crops of grains now.
Okay.
So any year you get a shortfall, you're going to make a higher high now. In 2012, we traded to all-time highs in corn and beans.
Yeah.
We have a situation like that again. We're going to go higher.
Yeah, no, that makes sense. And I guess what the difference is on the softs like that is that, hey, guess what? They got to grow. If you have a storm and something happens, then it's really a problem, right?
Right.
Yeah.
I mean, you talk about something like sugar. Sugar's done really well. I mean, sugar was 10 cents a pound. Now it's over 16 cents. In August, it was 10 cents a pound.
It's pretty amazing.
Now it's over 16 cents. Coffee hasn't moved yet, but the problems with Brazil with weather could translate to the coffee market as the world's largest producer of coffee beans, and we could see that there. And finally, cocoa, roofing.
Cocoa's roofing, baby. I love it.
Cocoa's roofing.
You stay right there, folks. Andy's going to be coming right back at 5 o'clock. Andy, thank you so much, man. Can't wait for the show tonight. Okay, have a great one, man. Have a safe one. You stay right there, folks. So we're going to be coming back with some numbers for you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Let's go over to Apple. So there's going to be some pretty good damage in this NDX tomorrow morning, folks. So Apple closed at 104. It's trading at 97 right now. It has that high volume swing at 96. So I suspect that's where it's going to go after. TWTR, Twitter. Let's take a look at Twitter. Twitter closed at $17.75. That's trading at $15.72. Not that Twitter is a big weighting in the NDX 100. It isn't. But bottom line is that that's a problem too for Twitter. That is. Let's see. So Twitter. Well, actually, let's go to Apple and find out fundamentally what's going on with Apple here. So let's see what they did here. Okay, so on a per-share basis, had a net income of $1.90. The results missed Wall Street expectations. The average estimate of 15 analysts for earnings was 1.97. And, you know, Apple always sandbags too, folks. That's the bottom line. And they couldn't make it. The maker of iPhones, iPads, and other products posted revenue of $50.56 billion in the period, which missed the street forecast of $51.51 billion. For the current quarter in July, Apple said expect revenue in the range of $41 to $43 billion. Apple shares, bottom line, of declining. So if we take a look at Apple, and as one of our tigers in the den said, Terry, you know, this is a classic too, folks. It's accumulation at lows, markup, distribution, and then markdown. And if we go through this, let me bring you through this for a second because it's pretty cool. If we put this on a monthly basis, what you're going to see, you had accumulation at lows. That's when Apple was down there at, you know, 2007, all of $13, running across of, $18. This is where the problem is Apple. If you have Apple, folks, just please get your stop in, okay? Because you think this is bad on a basis as to where the volume is on Apple. Your first stop is kind of where it's going to be right now, which is the $92 area. You break 92, Apple is going to be down to 57, and guess what? Where the real take is, and this is pretty sick, is the highs of 2008, which is $26. So they better come up with something. When you look at this, you're going to see that there's absolutely zero volume at these highs, and it was for months. So the longer that you go sideways with light volume, and in Apple's case, it was at highs from November of 2014 from 107, going all the way over to December of 2015. That's a long time. Light volume, and then what you're going to see, we're going to see the spike down in January was the highest volume thus far, and I suspect by the time this end month comes down, you're going to have higher volume on the way down. So, bottom line, that is going to put some monster volume inside the Qs tomorrow. The Qs right now are trading at 107.65, so that's down about another 80 cents from the close. The QIDs, which is the doubles, that closed, that's up about 50 cents, and the SQQs, which is the triples, that is up like 55 cents. So there's going to be some action out here all over the place. There's no doubt about that. Tomorrow, what are you going to have? Watch the bond market, folks, because what we did have out here inside the notes and the bonds today, the Federal Reserve's coming out with their statement at 2 o'clock. Bottom line, the consensus is that no rate hike. The way that the bonds are trading, more than likely inside that statement is going to be maybe the setup that they're going to say that they're going to go up in June. When I look at world rates, it's like going to go up in June, man. We still have rates that are really high in compared to where the world rates are. So bottom line, going to be lots of action out here. You stay right here, man. Mr. Andy Heck's going to be coming up next. He's going to be growling and prowling with you, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Stay right there. Andy's coming right up. Go get him, folks.